Morning traders, and this is your Aussie day trade setup for today. So a couple of scenarios. We did have a pretty strong rally yesterday, and we also closed on our high. So that on the daily, if you look at our oscillators, that's a really good bullish signal, and you would expect some continuation up. So we do have a gap above, which I think would be the first magnet at the moment. So if we start just drilling down through the lower time frames, it does look like a potential double bottom. We kind of have closed above the neckline of that double bottom. There it is there. US markets had a rampant day yesterday with the Dow up 11%, S&P was up 8.3 or something percent, and the Nasdaq was also up 8.5%. So at this stage, I think we are going to see a bit of a bounce. So the bounce is based on the Feds, the US Fed, that have pumped more money in and signed off a couple more bills to print some more money and pump it into the market. So I think we're still going to see a little bit of a bounce. The question is whether the bounce is going to be sustained. Okay, with the world shutting down, I strongly don't think that's going to happen. So I'll be looking for shorts again higher up. But at this stage, looking at the 3-hour, we are top of range, could be above a double bottom, so it is possible. But I think this first target is going to be gap close. If we can get the gap closed, then I would expect to bounce back, and then I would look to see whether this area of 37,400 is going to hold. If 37,400 holds, or 37,460 I think is the right number, if we can hold that level, then I'd expect a move to the upside, which would then be pretty much the range. Okay, so it would break the range to the upside, and that would give us something like that. Somewhere around 41,200. Okay, so volatility I think is going to be with us still today. It's going to be with us for quite some time. And remember, South Africa goes into lockdown this week as well. So if you look at the hour, that lines up pretty much with the 200 EMA. If you look at our oscillators are warning us that we need to be looking for a level. Okay, so I'm not really keen on chasing longs at the moment. Wait for some kind of a pullback and then get in with a long. But again, same advice as yesterday. Come down to your lower time frames. Just going to take a 5 minute because that's probably the most logical one. And since we're all going into lockdown, you're going to have lots of time for this. So you can see the initial open, pullback, okay, and then you can see a buyer starting to come in, and you can see how the moving averages don't change. And you see what I mean by the oscillators being far apart. I often mention it when the oscillators are far apart and they cross over. It's normally a violent move, and you can see there's a violent move up. Okay, so same advice today really is wait that first half hour out, and I think this was probably more than half an hour. It was probably until Europe came online. So that was 14 bars, which was 7:40, 8:49:40. So pretty much 9:30 area when the buyers started stepping in and driving this up. And that yesterday, just on your 5 minute, your risk to reward 260 odd points, and if you look at your gain, 1,700 points. Okay, so that's pretty much my advice for you today is pick a relatively low time frame like the hour. That'll give you the indication of where the trend is. Trend is up at the moment, but it is overbought right now. So you want to see some structure form. And as soon as the structure is formed, then go with the trend, but take profit at the levels. And this gap is the first area that I would do. Pull back on that will be key. If we come back and test these breakouts here, that is the area that I would be interested in getting back in for another long. Okay, so yeah, I think stick to the lower time frames, trade them as you see them, and you'll see the initial chaos of the open. Wait that out, and then as soon as it starts settling into a rhythm, then just go with the trend, whether it's up or whether it's down. Just keep your stops really tight. Okay, so anyway, guys, that's my view at the moment. I think we're still going to bounce a little bit more. The question is whether we're going to get through this gap area here or not. So this is really just based on stimulus that's coming out of the US. But the problem that we have is the US is making a lot of noise around opening up their economy again just after Easter. So yeah, it depends how that pans out as well. Okay, so Hope it helps, and we'll catch you later. Cheers for now.